This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices lower this morning. A couple of reasons for this. For one thing, the problems between the European Union and Greece concerning the Greek bailout package, those problems seem to be intensifying. Also, we have more talk that the Fed could raise interest rates sooner rather than later. In fact, we had Fed Bank President Fisher recently saying things that would suggest that the Fed could be raising sooner. Once the Fed meeting is out of the way, and that meeting is scheduled for March 17th and the 18th, I think we can see the bull market resume for stock index futures. Also keep in mind that whenever the Fed does raise interest rates, whether it's earlier or later, that it's not the first rate increase from the Fed that tops out a stock market bull advance. It is the last one. So whenever the Fed does raise interest rates, I would not expect the bull market to end with that announcement, whenever that is, whether it's sooner or later. Over in the currencies, the dollar index advancing to almost a 12-year high in the overnight trade as interest rate differentials continue to favor the dollar over other currencies. Also, there's a flight to quality element coming into the dollar with the political problems concerning the Euro zone, the European Union and Greece with their debt bailout situation in jeopardy as far as Greece is concerned. Also, by the same token, we had the euro currency falling to a 12-year low as those problems between the European Union and Greece persist and apparently are getting worse. Longer term, though, it still appears that as long as the Fed is talking hawkish, and there is a possibility that the Fed could raise rates sooner rather than later, the dollar is likely to be well supported against all of the other major currencies. And in the interest rate markets, futures higher now, even though we do have a lot of supply this week, $58 billion in Treasury debt to be sold this week, today, tomorrow, and Thursday for those three auctions. Somewhat of a rebound today, flight to quality and influence with the European Union Greek situation. I think one of the main reasons for the strength that we are seeing in treasuries today. Once we get through with the Fed meeting, as we mentioned on the 17th and the 18th, I think we can see a more stable market and a more sustained advance at the long end of the curve. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.